It takes a couple seconds to do this. Okay, we are live. Welcome everyone to the Fintech Book Club, July 12th, 2024, our third meeting and our first on our new LinkedIn page. So I want to welcome everyone. We'll see if the interconnectivity between apps works. My name is Tessa Cohen, and today we are going to discuss Future Money, Fintech, AI, and Web3 by Ronit Ghose, published by Kogan Page 2024. So it's new and available anywhere you get your books. So first, I want to take an opportunity to introduce the group, and we'll start first with Barb.
Hi, everyone, and thanks a lot for joining us this morning. I'm Barb McLean. By day, I'm working as head of technology at Coastal Community Bank. By weekend, you can find me publishing the FinTech playlist on Sundays on LinkedIn.
Hello,
Jim?
I'm Jim Perry. I'm senior strategist at Market Insights. We're a consulting firm based out of Seattle, but I source out of Michigan. So greetings to everyone this morning. I really appreciate you joining us because this is a fascinating book.
Effie?
Hi, I'm Effie Pilarino. I am the only one here in Europe. I'm normally based in Zurich. Right now I'm in Athens, Greece, and it is hot. I am a global fintech influencer, and I'm delighted to be in this Fintech book club. And I confess that I just realized that I've never been in a book club that has been broadcasting. So I'm really excited. There's always an opportunity to have the first one.
And again, my name is Tessa Cohen. I'm a independent analyst and consultant. You can find me at pivotassets.substack.com, where I publish my newsletter, and also at thirdeyeadvisory.com, where I work with a great bunch of folks. And I still have my own consultancy at pivotassets.co. So let's get started. As we've all alluded to, this book is chock full of stuff, really amazing analysis, facts, strategies, insights. So let's go around and let's start off by what really got to you, fascinated you, disrupted your thinking today. Want me to call on someone? I'll call on Effie.
Yeah, and I had the pleasure to see again Ronit, the author, just about 10 days ago at the Point Zero Forum. So I got him to sign the book. I gave him directly the feedback. My first, elevator pitch about this book is I felt as if I sat next to Ronit in one of those restaurants that he describes, let alone that I want to visit every single restaurant that he describes, meeting all these amazing people that are part of the global fintech journey. And, I feel that he didn't make up these people. These are real people, the CEO, the founder of Paytm. It's very unique, his book, because he really brings a global perspective to life with these people, and especially East Africa. And because of his experience, he ties it with the developed world. One of the disruptive thoughts that have stayed with me, and there are many, is what I would call my favorite what if statement from Ronit's book. And the statement is, what if payments get completely detached from banks? What then? Or then what? Will we have to say goodbye to fractional reserve banking? And that, I would say, is my favorite what if statement. And the second one, it's not exactly a what if statement, but it is a disruptive thought in along the lines of the reduced or the declining dominance of the US dollar globally that's been discussed, and with the huge spotlight on central bank digital currencies, the spotlight on geopolitics and how much it matters for the evolution of money. What if the next reserve currency doesn't belong to any physical jurisdiction? So I'll stop there with those two disruptive what if statements that have really stayed with me from the book.
I
Over
think for
to
me,
you.
it was the stories that we maybe haven't heard yet. I I'm thinking some of the same things I think you all are, in that I really appreciated having a very global view of what has happened and is happening. And that was the disruptive thought for me, is this is happening everywhere. And, he uses, I think, the now maybe infamous quote of, capability is evenly distributed, but opportunity is not. And I know I'm not mashing that particular quote a little bit, but I did really enjoy hearing stories that I hadn't heard before. Those of us that have been, working or paying attention to fintech for a number of years tend to hear the same stories of the same people and organizations a lot. And yes, he had, potentially a unique view on some of that also included in the book. The better part for me was hearing about people that have gone and, made things work for their local communities. And I hadn't heard those stories before. So the idea that there's these other learnings that we can gather if we just pay attention to places we haven't, looked or sought out before, that there's a learning in that for us. That was the disruptive thought for me.
Well, I'll jump in because, as you've both already noted, the fact that there's such a global emphasis on the stories that are told here, I think that can be disruptive, certainly for a lot of folks that I work with on a routine basis. I work primarily with community-based institutions, banks, credit unions, and for the most part, they go through their entire day, their entire week, their entire month without really thinking about anything on a global scale. And so to pause just long enough to do that is disruptive in and of itself. But I think on a very basic level, one of the things that I really enjoyed about this book is that Ronit ends up kind of laying out both an historic and a very contemporary foundation for us to think about what is the future of money. He doesn't answer that question. He doesn't predict anything necessarily, but he does stimulate thought. I mean, he gets us thinking. I mean, the very fact that he calls us to remember that money has value simply because people collectively agree to ascribe value to it. That's kind of like, boom, oh yeah, I forgot that. We tend not to think about that until we start having conversations about CBDC or stable coins or what have you. And it's like, everybody needs to read this book.
I don't think I expected as much historical learning out of a book titled The Future of Money, actually. Right. And I so appreciated the artful way that he wove in, here's the place we came from to get to the place that we are now on this topic. It was really well done. And how he then interwaved that with the personal stories. It was fascinating.
That's very, very skillful, because at first I was reading, and I'm interested in the history of fintech, and we live so much in the day. What's the hot fintech? Who got $10 million this week or last week or next week? But to really take that global perspective, but not just here's the history, which I can appreciate, but it is tied to the future, as Jim was saying. And for me, the real disruptive thought were the variables that banks don't control directly, like public infrastructure.
Mm-hmm.
centralized public infrastructure, which in the US is kind of lacking. And in other countries, they've made the commitment to, we're going to do this. And then things around digital identity, you know, at a centralized, we're going to use digital identities, and this is what we're going to use. And maybe it's to address specific problems, but he, for example, in India, he raises it up and going, yes, enabling every person to become banked gave us this ability to identify people in a standardized way. You know, and that's something that I think especially U.S. banks have to look at and see that certain things are in their interest around.
In an
public
ironic
infrastructure.
way, I want to say, and I'd love your opinion, that the title doesn't do just to the book. This book is more important than what you think of when you read this title. I don't know how you feel about that statement.
I certainly agree with that, because there's so much depth to these stories that are told. First of all, they're very engaging, but it lays out kind of a framework where you have to consider, what are we doing now to actually shape what the future of money is going to look like, what the future of our financial system is going to look like. You know, as Stessa is pointing out, yes, governments have always had a role in providing that kind of underlying regulatory framework, that policy framework, that legal structure that's either going to support the system that we have for financial exchange or not. And right now in the US, I mean, it's very complex and very cumbersome, and it's taking a great deal of effort to move the dial forward, where, again, from a global perspective, there are a lot of places that are doing some amazing things to benefit most of their population.
Yeah, and that kind of leads to actually the question that Mark Cohen just pushed over. Like, what if banks are pressuring governments to go their way, and what challenges does fintech face in terms of regulatory compliance and security? And this leads also to the question that I had reading this, like, what is the real role of government in digital banking? You know, fintechs and innovation. I mean, you know, we're seeing all kinds of fallout from pick your bank and fintech right now. Synapse, Evolve, you know, whoever it is, and that's only from a US perspective that's running afoul of regulatory compliance. And I know sometimes in the US, the compliance has been, we'll know you've failed to comply when we see it, as opposed to, here's the guardrails and we're going to set this up and do it. But also, how do we facilitate innovation in a structural way, right? Mm-hmm. You know, like roads are really important to interstate commerce. You can't have national highways and commerce in the US without those interstate highways. They didn't get funded by states. So just to use a mundane example, how do you facilitate all those rails? And I know Effie's talked about this in the past, that rails are really old for payments. So I think that's a real, I mean, one of the things this book does is push up this idea that there's a different role for governments than what we think of. You know, I think, yeah, there's going to be more compliance and security, but it's more than just, did you comply A, B, and C, but here are tools at a strategic national level to help, right? Do we want every fintech coming up with their own biometric IDs for banks? Does that work?
Right.
Yeah.
I think there's a layer above that then that touches on the global theme of the book. Does that need to be so different from jurisdiction to jurisdiction? There was a very clear message I think that Ronit was trying to send to all of us on localization is important, right? Making whatever solution you're trying to bring to somebody's problem relevant for your community and your geography. But there is potentially some consistency that we can, across the industry globally, try to drive there so that we're not reinventing the wheels that don't need to be reinvented. I think both of those topics actually go hand in hand.
Very, very much so. I agree, Barb. One of the things that, again, I tend to oversimplify things sometimes, but at a fundamental level, governments really have a responsibility for what? Three things: digital identity verification, digital data exchange, and digital payments. Setting the guardrails in place for those things. Obviously, we have examples all over the world now, and Ronit's book reminds us of that, of how various pieces fit into those kind of three general categories. What we have such trouble with in the United States always has to do with the issue of payments. We're moving slowly on the other two, but the issue of payments, there's such issue around that. All you have to do is look at how industry advocates are often out there pushing against central bank digital currencies, stable coins, etc. And you see why there's such kind of push and pull and why we get stuck.
Yeah. Well, I don't know if the U.S. is unique, but we always have this centralized, decentralized struggle that goes back to the 13 colonies. Sorry.
Right.
Sorry, Evan.
I feel that the U.S. is not at all aware, or the financial services system is not aware of the significance for the U.S. of what India is doing with its UPI and the India stack, that is not only an India domestic fintech success story. They are starting to export it in the region. So Ronit explicitly at some point posed the question whether India will become the fintech factory of the world. And my interpretation is that it doesn't mean that India will be, where the programmers, you outsource like it used to be tech talent there. But I think that he's alluding to the fact that the successful fintech infrastructure that they have built, they're going to export it and build the integrations to the region. And all this has very much to do with international financial flows of money, remittances, and much more, which is exactly what affects the reserve status of the US dollar. And Ronit explicitly emphasizes, and I wish there was bold, but I don't think the publishers like much bolding. But he does say, do not forget that financial flows are much bigger than commercial flows. So this matters a lot.
Yeah, and he pulls that out again and again, and showing the ways that, yes, remittances are important, or people-to-people payments are important, but it works a lot different in African countries, and it depends on which African countries, than it does in India or even China, because you're talking about, like, I really appreciate the way he talked about the humans involved in digital money flow in African countries, because people didn't have access to a phone, and they had the agent network, which has been there for a long time, or even the use of WhatsApp to drive microcredit. I was like, this is great. I hadn't heard that, which is part of using the infrastructure, again, to increase the money flow in a way that's beneficial for for the citizens and not just the government, because if people are able to sell their products and receive funds from the government and other people, that's better for the whole ecosystem. But yeah, you're right, and I think the U.S. needs to be paying attention to these initiatives. I remember when I was in India, in my previous life, I got to speak to the people that were starting UPI, and that old legacy brain was like, oh, I'll wait to see if this really happens because it's such a huge project, and lo and behold, it did. And the change in India is huge because the bankers didn't know what to do before this with those customers that they didn't have and they didn't really want, because to onboard them was so expensive. So let's do we want to switch to a different type of topic around one of the things that he talks about also is big legacy banks, and transformation. They really rarely get past process improvement without this public infrastructure. And I just wrote about the end of digital transformation, which I think dovetails nicely with this. But I think this was really, important. One of the big drivers for the end of paper checks in the US was the large vendors going to DC, the ones that had proprietary check archives and check capture, saying, you have got to digitize this, allow us to digitize this in a standardized way. And finally, they were able to get through this process improvement of processing checks faster. I mean, who cares, right? And that was the beginning of the stake being driven into the heart of paper checks, which are horrible, right? So, how do we get that sync up? Because I mean, one of the things we've read in our previous book, Bankers Like Us, is that the inertia, the inability of banks to actually change, and so much that is focused on is really process improvement. How do we move, and what examples can banks look to really force them to push on this at it's even beyond strategic level, I think.
One of the things that I appreciated about the book is it pretty clearly makes the point that if banks don't move past their kind of current slow moving situation, the way technology is moving right now, they're going to risk losing market share. They're going to risk kind of new areas in e-commerce, all the rest that are being shaped globally by new technology. And, without, I think sometimes the threat of losing out is the thing that pulls a lot of people forward, as opposed to just saying, we know we need to do this. Because as you say, the initiative, the inertia is behind the status quo. It's like, we only change. I mean, for God's sakes, it's just this next week, Target here in the United States is finally stopping taking paper checks at the counter. I mean, and of course, there are probably consumers that are going, oh, I hate that. But at the same time, again, it can't always be driven by what the consumer is thinking, because the consumers don't know the tools that financial services has available to them if financial services don't offer it up.
To help answer that question, I think he did a great job of laying out specific examples of successes and some that were not as successful, right?
Mm-hmm.
Talking about the blend of not only the technology, but the change of the business model to use that technology. And without those two things, I think that's the lesson underneath the, is it a success or a failure? Because if, you have a drive to, take more of a leap than an increment in the changes you're making in the technology you use if you haven't also made changes to your business model. How do you evaluate risk? How do you make decisions? You're probably going to land in that failure bucket. Technology alone is not the answer there. You have to have the blend of both. And we saw examples that he was calling out of both, I think.
Yeah.
And he made the great points about how, similar same technologies are used in different jurisdictions, but for a very different reason. In one jurisdiction, it might be to reduce costs, or what Cesar was saying earlier, optimize efficiencies and so on. And in another region, it's really pure financial inclusion. So that is important.
Yeah. Yeah, another thing that stood out for me was the whole idea of fintech hubs. Like everybody thinks, London, New York, um, Hong Kong, maybe Bangalore, Mumbai, and Silicon Valley. And I think one of the things that all of the details that he's giving, it wasn't so exhaustive, but saying, here are some other places where people are innovating, and this could generate, there will be more innovation. I work with a client in Eastern Africa myself, and they're nowhere near what Kenya is doing. Very close by, but nowhere near Kenya. Totally different infrastructure and everything. But it's possible that they could become a fintech hub, and other countries in the African continent could be. And similarly in Asia, I mean, I like the way, Americans, particularly Asia, like it's a place. And it's not many countries like Latin America. There are so many countries. And that kind of thing is that these variables around telco and cost of data, infrastructure, that scarcity versus abundance mindset, which I think is really important, and as that changes in a country, all these things can push development. And so where we look to Silicon Valley now and all the focus is there, there's so much else happening that I think that's really problematic for banks to be focused on.
I think in the fintech world, we all know, the Silicon Valley mentality, and, we're familiar with these hubs. But when I was reading the book, I just had to highlight what is the Zheng He moment for fintech. And this is apparently a Chinese restaurant that is famous, and it's like connected to the history of China. And I'm looking at the book because it's really, for me, it was one of those highlights. Who is Zheng He, right? Apparently a figure from the 1300s, more like the Vasco da Gama that we know. So I just found this book fascinating from that perspective too, and stories from India and Africa and the Middle East, and it just wants me to fly all over the world and look at fintech in a totally different way. Really, let's get on a magic carpet and do a world tour like that around the world.
Well, Theo Lau has put in a plug for Asia,
I see that.
so that we can learn about the diversity of the Asian region, whatever that means. I mean, we also have a question about risks associated with sending biometric data from a phone to a fintech platform, and how to address concerns about security and privacy of biometric data. So I guess I was wondering if you, Barb, could, from an operational strategic way, could you address some of that and we can chime in?
I think actually Ronit was probably trying to give us some clues here about, which technologies are appropriate to solve what kind of problem in the later stages of the book. He talks an awful lot about, blockchain related technologies, but within that, he starts to talk about tokenization. And I think that's one approach that can help everyone mitigate the, security privacy risks that we're starting to talk about here in Mark's question is, don't share the data itself, share a representation of the data. And I think that becomes really important even outside of thinking about, biometric data. It probably doesn't matter what kind of data you're talking about there. The industry certainly will benefit customers by finding, again, more standardized ways to make it easier to share these representations of data versus the data itself. Why is it that we've only found ways to just send copious amounts of data amongst ourselves to make any of these experiences work? So there's a lesson in there, I think, that goes beyond just thinking about DLT and, coins and other uses of blockchain, but it's probably the tokenization element of that where I would direct people to start thinking about.
Yeah. And again, like Effie mentioned about banks being in risk of not being involved in payments, that banks still have some of that trust and data and identity to create. And I know David Birch writes and talks a lot about this, about digital identity, because it's so linked not just to money or transactions, but financial flow. That financial flow. And yeah. So it seems like it's even more important, as somebody who focuses a lot on customer experience stuff, whatever that is anymore, more important than the front end and delivery are these huge issues that'll impact whether you have any customers to serve, because somebody's going to do this.
Right.
Yeah. The magic of how you verify whatever information you want to verify through a blockchain tech stack without moving the data, but only by touching it without displacing it. And I remember in the early days here in Switzerland, in the blockchain ecosystem, a brilliant presentation where somebody was showing whether, if you have a gold ring and you want the expert to verify that it is gold, you don't leave the ring, in the store, but the expert can put his hands through two holes, touch the ring, and verify with that touch that it is gold from the expertise that he has, but he hasn't moved the item from where it belongs. And this is exactly what we need to build, to verify in a secure way without moving the data around.
Yeah, that's an excellent point.
Barb, when you were talking about tokenization, one of the things that kind of strikes me is the degree to which Ronit is really inviting us all to bear a level of responsibility for kind of releasing or letting go of the kind of proprietary systems that keep us where we are right now. How we process digital transactions, how we do these things. In order to actually leverage these new technologies, we have to lean into them. We have to explore them, let go of what we know is familiar. And that, I think, is one of the great elements of this book as well. It's like, okay, don't just have open minds, actually lean in and take responsibility for moving things forward.
Yeah, and that's where the conversion or intersection of fintech and AI and metaverse and Web3, which I really like the way he explained it. It really builds on our first book that we read on Web 3.0 and metaverse. So, okay, we have to take innovation to the next stage. Have you set up the right infrastructure, do you have the variables? Do you have that abundance mindset? Do you have entrepreneurs that are willing to take risks, and how do you support them? Like with low cost data, telco data, that supports entrepreneurs in ways that, I hadn't really thought about, and that he makes like through these examples. And then here's the next stage that AI and metaverse are going to take us to, and here are the risks, because it's really nice to not go into these things with rose-colored glasses.
Sure.
There are huge risks, but in my mind, it keeps tying back to the infrastructure. If you don't have a way to deal with the security, around these issues, and you keep it only in the hands of the individual fintechs or banks, that's going to be a problem. It's just going to become more magnified when you're creating digital assets that need to be protected and moved in ways that you can't see, touch, or maybe even feel. But are generating huge amounts of revenue. Are you going to leave that to Google and Facebook to determine? That seems a
There's
little
one
risky to me.
question from the audience that I'd like to answer around the assault on the dollar as a reserve currency, with the CBDCs. First of all, the thinking that the countries, and there's so many of them, that are researching, piloting, launching CBDCs of all sorts, retail or wholesale, that they are doing that with the aim to assault the dollar as a world reserve currency is a very US centric view, I must say. I'm not saying whether it's true or not, but it is a very US centric view. Most countries, most jurisdictions are looking into CBDCs and to see what they could serve for their domestic economy and their trade relationships, whether that results as a side effect in a reduction of using the US dollar for international trade. That's a secondary thing. So I don't see that is how the world is operating. The fact that a lot of the very secondary currencies, domestic currencies from countries that have not played a major role in international financial flows are looking to change that. That is a fact, and that has to do very much so with sanctions rather than anything else. So again, it is not, I don't think that the book talks about it unless I missed something or I didn't pay attention uh, about countries really going into CBDCs for this reason.
Yeah, it seemed to be more that it would start to give a choice where there hasn't been necessarily before, and that other currencies could become the reserve currency. And again, I'm not a currency or international finance expert, but I think that, but it's also like you were pointing to a real issue. If you were in a country that has a currency that's not like, like Serbia or Ethiopia, where they have very specific currencies not used anywhere else, and there are many countries like this, getting money moved into a currency that you can use to pay somebody is a really difficult process. And how can some of these technologies facilitate that? The banks are interested in, small businesses are interested in, corporates are interested in, and the government is interested in, because they need currencies too, right?
Right.
So, I think it's not so much, is it the dollar, but if the US government doesn't pay attention to this, it might not be the dollar, just because what works best is going to be where people go.
Yeah,
And
and this is not
I sort
only
of
about, yeah, go ahead, Barb.
I
Sorry.
like Jeff's point. I think that, maybe everything is more connected than we're potentially implying. We might be thinking too, in a box about which type of technology is supporting which capability here, because I think his point about the fact that lots of us don't actually carry physical money anymore is quite relevant. And how do you ensure then where, you know, the ones and zeros that are underneath the account balance that I actually have when I tap my phone at the grocery store to buy my bananas, how do I actually make that interoperable with the idea that, you know, there may be actually a digital currency being issued in the nation where I live? And how does that interoperability work between, you know, what is now the digital representation of physical money and the actual digital currency that's being issued by that country? I think that's a really interesting topic, and you know, the book doesn't explore it, but you know, that interoperability discussion, I think, is an interesting one.
Well, Mark made the point that stable coins are predicated on the continued supremacy of the U.S. dollar. And I think Ronit goes into stable coins versus other cryptocurrencies. So, you know, I think it's a complicated, complex issue that people who understand those issues really need to dig in, and they should be reading this book, because it's not just about the U.S. dollar reserves, but all the stuff around it, you know, all the stuff around it, you know, that, and it pushes out into these things like, you know, biometric data. How do we move that? And how do we standardize that? Even though it doesn't look connected. And I think that's one of the, also when you come to the end of this book, you see it's all connected. It's all, so, you know, a startup in Ghana is really related to, you know, government strategies around infrastructure, telco rates, and then what's going on in South Africa or not going on, and expats in New York hedge funds. I mean, you know, I really like that. I think one of the things that I also really liked was, Effie pointed this out, being a camel to cross the funding desert and not a unicorn in the waiting room. Because, I mean, unicorns are pretty to look at, but it's those camels crossing the desert, the ones that can't get funding right away because they're in a country that nobody invests in, right?
Yes.
Or isn't a fintech hub, or doesn't do something sexy, right?
Right.
I mean, but ends up changing the lives of so many people, and takes them, down a path, as Theo said, you know, getting your hands dirty in stuff that is, you know, requires that, you know, moving to Pakistan. I love that. Moving to Pakistan or back to Kenya,
and
wherever
really
it is,
understanding the nuances of the East, that we think of the East, you know, like everything's the same, right? And he really brings it alive.
Yeah. So
richness.
So I think, you know, we all really enjoyed the book. I think we can all agree that there was one thing lacking. No list of all the restaurants he visited around the world.
I do think the Fintech Book Club needs to, you know, evolve into the Fintech Supper Club, and then we can start to make use of that.
That's right. So Ronit should
so this is a request to the author, right? We need he needs to provide exclusively to the Fintech Book Club the list of the restaurants, and we will make good use of that with technology.
Absolutely.
Okay? And I think he can include not just
is on vacation, and he asks pardon because he's not on this call.
Well, he can listen to the recording, which we will be pushing out, and supply the answers that we have requested, these important answers. And I think I would go so far as say not just the restaurants that he published, because I assume there were many other conversations in many other restaurants, and I want those too.
Absolutely. And I would challenge him with the title of the book. It should have been Our Future Through Money. I think that is more closer to the book. And it really, now that we're discussing this, it's closer to the type of books that Neil Ferguson writes about money, you know, the ascent of money and so on. It's got so much, you know, historical perspective, and I loved the names and the people and the nuances, just amazing. Really, really wonderful.
Yeah,
Read.
yeah. And I know we didn't touch so much on metaverse, which we did in our first book, which you can get the recording and video of, and AI so much. But I think it's a natural extension of all these issues. You can't do them with blinders on. You can't do them with rose-colored glasses on. You can't do them ignoring the context and all these other things. And I think he ties that really really well together, so that it's not just AI or metaverse, but whatever comes next. I think he's positioned it really well.
Yeah.
So
Great.
I want to thank all three of us for joining today. It's great to see you all. And thank you everyone who's joined us live. And a link will be available with the video. And just watch your LinkedIn spaces on our Facebook page, our LinkedIn page. Sorry about that.
Thank
and
you.
I would
Great.
suggest that to the audience, if there are books that you're reading that you think we should take a look at, please send us a message. Leave us a note on our LinkedIn page, because we're always looking for those recommendations.
Yeah. We haven't chosen our next book yet and the date, but we typically do this, I think, once a quarter. And we'll be choosing that book and announcing it on the Facebook page and all of our, I'm sorry, I did it again, LinkedIn page. Anyway, at least I didn't use the T word.
Exactly.
So look for us on LinkedIn, and thank you for attending live or watching the recording. Everybody stay cool, stay dry, and
Enjoy the summer.
We'll see you next time. Bye.